Check it off the list.
Yes, another thing to check off the list. All right. So we're going to move on to education loans, and this
One
will
other
be.
question,
Oh,
Carrie,
sure.
about who would bypass the identity verification. So for the FSA ID, if a contributor does not have a social security number, they will be prompted to do the identity verification, and but they can complete the FAFSA without having successfully done that. But then they will still be prompted to do it. That is a waiver for the 24-25 year and for 25-26. And so just to clarify, the student has to have a social security number or be an eligible non-citizen from a freely associated state in order to be eligible for federal aid, but their contributors, like a parent or spouse, do not have to have a social security number.
Great. Thank you, Stacy.
Yeah. All right. I'll give Carrie a rest for a moment. I'll take over on educational loans. There are not a ton of updates in this section. So let's go ahead to the next slide. The big excitement, which is not exciting but frustrating, is that the SAVE repayment plan is currently on hold. So SAVE stands for Saving on a Valuable Education. It replaced a different income-based repayment plan, and it reduced monthly payments for many students who enrolled in this, and various loans were eligible. It is currently on hold as litigation moves through the courts, but those that had enrolled in the SAVE repayment plan are automatically in a no interest forbearance. Those months of forbearance where they do not have to make a payment will not count towards public service loan forgiveness. So that is something to consider if a student is working towards that. But the forbearance is currently extended to April 2025, and that date may change as litigation continues. The other exciting update for loans in general in repayment is that income verification for income-based repayment programs can be done directly through that IRS direct data exchange now. So a borrower can approve the transfer of the information from the IRS, and that will pull it over automatically. They don't need to provide a copy of taxes. They don't have to know what their address was 2 years ago, which is great. And that process will automatically continue every year from that point unless a borrower revokes their consent. So it's great for those students who we found that previous years, those that were doing income verification may forget, and then they would not be eligible for that income-based repayment anymore, and that can now be put basically on auto and take care of itself. That's the major update for loans. So a reminder that loan interest rates are set each year. So this is the current 24-25 slide of interest rates for students and origination fees. And so we wanted to make sure that was clear for the current year, but also to remind everybody that the origination fee is taken out of the amount that is borrowed before it is applied to the student's account. So that is a fee that is given to the loan processor for doing the paperwork of getting this in place. So the student loan, if a student were to borrow $5,500, for example, as a freshman, only $5,442 would actually go against their bill. And then for the plus loan, note that the origination fee is significantly higher. So if a parent were to borrow $5,000, 4789 would be applied to the bill. And for the families that are trying to really budget this to the dollar, that's really important to take into account. And so these are the current interest rates, and those will be um, determined for 25-26, typically in June of each year. Student loans, these are when the student is the borrower, and we always encourage students to accept their federal student loans first. These are called direct student loans. The current interest rate, 6.53%. And students will be eligible to borrow these loans automatically when they complete the FAFSA. And then if they want the loans, there will be additional paperwork to fill out a promissory note and entrance counseling so they understand what it is to borrow and pay back interest. Most colleges are going to package student loans for their students in their financial aid awards and likely the full amount. So that's likely part of the package as you're reviewing it. There are also non-federal student loans. So there are various lenders, including nonprofits like VSAC or for-profit organizations or banks or credit unions. So these can be called alternative loans or private loans, and they are an option that students may want to compare to determine what's the best selection for them. There are varying interest rates, there are fixed interest rates, there are different lengths of repayment, and there are different borrower benefits like reduction in interest rate for auto pay. These are all things you can review and compare, and we actually do a publication, which we'll talk about a little bit later, about comparing loans, which can be very helpful. So the current VSAC private loan is the Vermont Advantage student loan. It's a fixed rate, depending upon the repayment terms of like length and what you want to pay. And we recommend you compare those to other options. Most non-federal student loans will require a co-signer, or as Carrie likes to say, a co-borrower, because they are equally responsible for paying it back if the student does not. Yeah. All right, parents also have multiple options for loans. The federal loan is called the PLUS, or parent loan for undergraduate students. Current interest rate is just above 9%. There are other parent borrowing options, including VSAC, who has a parent advantage loan, also at a fixed rate, and other non-federal lenders, including nonprofits, for-profits, and banks and credit unions. These, including the PLUS loan, we really recommend that families review these and compare them to see what is the best option. Many schools will package a Parent Plus loan as an option, and I try to remind students that this is the school saying, this is the unmet need. Here is one way to cover it. But families should review their other options for covering it to make sure they're getting the best option for themselves. And again, that's going to be in our publication, which I think might be right here. So we strongly recommend checking this out. This is not an advertisement for VSAC student loans. It is information about what it means to borrow, interest, options for repayment, options for forgiveness, and the way that education loans work. So we encourage you to visit our website. You can order an education loan guide and you can read it online. And there are options through VSAC, as I said, that may be good options for the students.
Stacy, we had a quick question come in, if I may.
Sure.
Are the VSAC loan amounts capped like the
Oh,
federal student loans are?
I was supposed to talk about that. That's a great question. Thank you. The parent loans, the plus loan and private federal loans are the cost of attendance, which includes tuition, fees, room and board or living expenses, books, transportation. The college builds a budget. That's called the cost of attendance minus whatever aid was offered to the student. What is left over is the eligibility for a parent loan. So school cost 50,000, they were offered 30,000 of aid, the parent, or the student with a cosigner can borrow the additional 20,000 difference. That's a great question. So this limited by the cost of attendance minus aid. These are some other loan resources that can be used to compare. I like The first one, the Debt Wizard, this is a great one for students to use to look at what they're borrowing compared to what they might make in their field when they're coming out to see if it's a reasonable amount to pay. There is a loan simulator on studentaid.gov where you can look at the different repayment options, what will happen if you do graduated repayment or extended repayment, and how that changes the payments themselves, but also the interest over time. And then Carrie did a great VSAC shows you how about choosing education loans. I just saw the chat pop up that they were asking about the cap on student loans. And yes, federal student loans are capped at $5,500 for first year, $6,500 second year, $7,500 third and fourth year, and then there was a lifetime limit. And that one's escaping me, Carrie. Do you remember the
You're testing me, but I think it's 31,000.
Yeah, somewhere around that. So
Yeah.
it's not like a full amount for a fifth year. So keep that in mind, as many students do not finish a 4-year degree in 4 years. And then independent students, it's very similar, but with an additional $4,000 of unsubsidized loan borrowing. So 9,500, 10,500, and then 11,500 third, fourth year, and also a limit, which is somewhere around 50,000, but I don't remember. We can check that. There are federal limits. So that is definitely a really important question because many students think that they can borrow whatever is missing from their unmet need, and that is not the case. They are capped in the federal loans, and borrowing after that is likely going to require a cosigner. Other questions for loans?
Can I just jump on to your answer, Stacy? Would that be okay?
Sure. Please.
I think when students are borrowing with another lender and they're borrowing the non-federal loans, this is really where conversations with families are going to be important because I don't believe we have a limit as far as how much students can borrow. We are looking at the ability to pay back, and we're looking at that with the co-borrower. So again, this is really one of those things where students and families are making financial decisions about this.
Great.